Hi everyone, welcome to my talk today. Especially thanks to the Star Property Awards for inviting me to this prestigious talk for today. Right, today I'm going to talk about the impact of OPR overnight policy rate on your borrowing and property markets. Well, interesting, right? What will happen if OPR keep on increasing? What will happen to your loan and what will happen to the property market? Before that, let me tell you, for those who have not hear my talk before, attend my talk before, let me tell you a little bit about my background. My name is Michael Yeoh, Michael with two eyes. My numerologist told me that, hey, Michael, after calculating, you need to put another eye to your Michael. Yes, I've been doing that for many, many years already. Michael with two eyes. My experience, I have 23 years of experience in mortgage and property. Yeah, I started a long time ago, and till now, I've helped thousands of loan borrowers and also property buyers, right? And throughout the years, I've worked in banks. Yeah, three banks. In fact, three banks. Standard Chartered Bank, my first bank. Then I move on to Hong Leong Bank before I end up in HSBC, and also investment companies, Huang DBS, and also Prudential Unit Trust. Before I came out on my own, there was 8 to 10 years ago, and started my own consultation company. Yeah, helping helping borrowers to get their loan approved. Right. Since I started speaking 8 years ago, I've spoke more than 200 times in seminar. Okay, in the last 8 years, sharing my knowledge on mortgages, okay, to borrowers, and also my view on property market. I have organized, and yes, I spoke in events. I have organized for real estate bodies, developers, and also property convention. So far, I've written in many magazines and newspaper, and also been featured in TV. This is why I've been featured for the last 8 years. And to date, I have published 3 books. Yeah, 3 books. My first book, Think Like a Banker, Act Like a Player. Yes. My second book, Property Investment BLT. BLT stands for Bank, Law and Tax. Together with written together with Chris Tan and Richard Un. And my latest book, which is also the weekly bestseller in NPH, with the title Buying Property Like a Pro. Yes, I have also more than 10 authors sharing their insights on their first purchase and also investment in properties. Yes, those who want to buy the books, you can still you can buy in the bookstore, or you can go to my website www.michaelyeoh.com and purchase. Michael with two eyes, huh? Right? Now, we know that the last more than 2 years, we have been facing COVID-19 pandemic, right? Everybody faced the same. Yes, we call it MCO, we have MSCO, a lot of O's. Yeah, everybody was hit hard. We have heard a lot of people got pay cuts, they lost their jobs, business closed, hotels closed down because there's no customers. Yes, we have been hit hard, but since the late last year, things have started to open up. The borders start to open. Now, even today, international travelers are coming in. The economy is starting to move again. So hopefully it will move all the way up. It slowly is moving, but it's moving towards going up. Right. Now, What I'm going to tell you is so far, what is the mortgage update in Malaysia itself? Okay, mortgage update in Malaysia. First and foremost, okay, you know what's reverse mortgage? You know what's reverse mortgage? Yeah. Many people are not aware of such a term called reverse mortgage. It's new in Malaysia, but not new in other parts of the world. Other parts of the world, like US, reverse mortgage has been around for more than 20 years. But Malaysia, it just came in. The first to do this, okay, Chagama just launched and they allocate 100 million towards giving out reverse mortgage. What is reverse mortgage? What is this? They cater for those who age 55 years old and above, okay, to the senior citizen. Those who cannot get mortgage, they will lend out. You don't have to pay, okay. You every month you get your what you call payout, every month payout. You don't have to pay. Towards the end of the tenor, okay, what the bank does is they sell the property, yeah, the profit, if there's they will deduct all their costs. If there's any profit, they will give to you or your beneficiaries. Yeah, this is called reverse mortgage. You don't have to pay your monthly installment, right? And they already started. Okay, slowly. I think now is by Chagamas, okay, guaranteed by Chagamas. But later on, I'll feel that more banks will be coming in with this mortgage package. Yeah, and this is actually to me is good because it helped a lot of mortgage borrowers. Right, this is reverse mortgage. What else? Inflation rate. You know what is the current inflation? As of April 2022, our inflation stands at 2.3%. It was once a negative, but inflation slowly is creeping up. I think you feel the pinch. Cost of goods has gone up. Things has gone up. You know, like our normal bread has gone up. The price, the wheat has gone up. Even a cup of coffee, if you go to the coffee shop, has increased tremendously to from 120, 130 to 160. This is inflation. Okay, 2.3% is the country's inflation. What is your inflation? Okay, our personal inflation can be higher than 2.3%. Yeah, normally a personal inflation is 8 to 10%, which is very high. Yeah, our own personal inflation. So you need to hedge against all this inflation. Yes, and inflation creeping up. You know that the mortgage interest rate will also to go up. Okay, to hedge against the inflation. I will talk a lot more on the mortgage inflation. Yep. If you talk about GDP, you talk about household debt against GDP, we are at, this is the latest one, 2021, okay, 2021, at 89%. Okay, it has come down from 93% to 89. It's still high. It's still high. It was once in 2001 at 82%. 82 or 80% is considered high. Malaysian, ours currently is 89. It's coming down by a bit, but it is still high. It shows that our debt, okay, our Malaysian debt, Malaysian love to borrow. Okay, that's why our debt is increasing. Okay, is increasing. We have to bear with this. Yeah, we are one of the highest debt, household debt against GDP in the world. Okay, we have placing in the world. Okay, that is the household debt against GDP. What about non-performing loan, NPL? What is NPL? Okay, NPL this is from Bank Negara. Okay, they call it gross impact loan. okay, loan ratio. Ours at 1.5%, which is considered an average. Okay, actually, average, not so high. NPL was once 4%. It came down to 1%, which is good. It shows that Malaysian love to borrow, but they still pay their loans. They still pay their loans. Yeah, 1.5%. Okay, 1.5%. So we are stable. Okay, hopefully we'll stay in the region of 1.5 to 2%. Now, another thing that is going to this is going to start in August, 1st of August 2022 this year. This is called standardized base rate, SBR. Okay, what is SBR? No, currently we are paying what base rate, right? Base rate, BLR, all this. Base rate, no more base rate anymore. After 1st of August this year, it was changed to standardized base rate. What is this? It means base rate is fluctuating. Every bank has their own base rate. Some have like 1%, some 1.5, some 2%. But after August, 1st August, all the banks will have the same rate, interest rate. They will have standardized it. Okay, which means it will follow exactly like OPR. So bank like in the schedule, bank A, bank B, bank C, all the same. But please take note. Okay. This SBR or standard base rate is only for housing loan and personal loan. Commercial loan still BLR. Okay, so BR to SBR, standardized ratio, base rate, is just for housing loan and personal loan, in which you will take into effect on August 1st. I wrote an article on this. You can go to my website and have a look. My website, the link is down here in my slide. Okay, you go to miichael.com. You can read all about it. I wrote about this BR to SBR and how it will affect you. Now, we all know our OPR, overnight policy rate, is one of the lowest. It's the lowest since long time ago, since way back 2014. It has gone down to 1.75, five times since the MC or the pandemic. Now, this year, okay, it has gone up to 25 basis point or 0.25%. This year in May, in May, it has gone up to 0.25. It makes, instead of 1.75, is at 2% now. It's at 2% now. Okay, what is 2%? Base rate, even at 2%, it has been it's still the lowest since 2014. It's still the lowest since 2014. Actually, it's way back 2014. During my time when I was in Standard Chartered Bank, okay, the interest rate have gone up more than 10%. Okay, 10%. That overall interest rate, I can tell you. Last time, you are paying, like now you are paying your, let's say, base rate, you plus a spread, you get around 3% or 3.5%, right? So if you consider it's high, consider this. When I was in Standard Chartered Bank 20 over years ago, interest rate skyrocketed to, plus the spread, everything is around 14%. You compare 3% to 12%. How many times? It's 4 times higher, right? So at 2%, to me, I can't complain much. It's still very low. It's still very low. Okay, it's still very low. It's still below the 3%. Okay, so 1.75 to 2%, 0.25, currently is at 2%. What happened when overnight policy rate fluctuates? No, overnight policy rate can go up and can come down. So it has gone down 5 times 2 years ago since the MCO. It have gone down 5 times, okay, to 1.75. Today, it has gone up to 0.2%. Okay, it has gone up to another 0.25. So up and down, what will happen to your installment? Okay, what will happen to your tenure years? Okay, something has to happen. Okay, something has to happen. It go up or it will come down. Right now, let's say your interest rate goes up. Like today has gone up, let's say 0.25%. Okay. Or 25 basis point, we call it 25 basis point, actually it's 0.25%. Okay, your interest rate. If interest rate were to go up, okay, interest rate were to go up, what will happen to your installment? What will happen to your installment? Your installment will increase, right? Okay, it will happen this, your installment will increase, your tenure years will still stay stagnant, the same. But your installment, instead of, let's say, paying 1,000 a month, you'll be paying 1,001 a month. Okay, extra 100 because interest rate has go up. Or the other way, another way is that you can maintain installment, but something has to go up. You have to increase your tenure years. Let's say 1,000, you still pay 1,000, but the tenure years, instead of, let's say, 25 years, go up to 30 years. Let's say 25 years, go up another 3 years, 28 years. Something has to go up. So when interest rate goes up, the bank will send a letter to you. Okay, normally they will adjust your installment. But likewise, if you want something different, like maintain installment, increase 10 years, you have to inform the bank. Okay, you either go to the branches or you call it up, but you have to sign something. Right? Now, let me give you an example. Let me give you an example. Okay. This is what I call mortgage comparison calculator. Yeah. So I have a few scenarios for you. The loan amount is at 500,000, yeah. Interest rate, we take it as 3%. The loan tenor, 35 years. Your monthly repayment, your monthly installment is 1924.25. Your total interest payable is 308,185 ringgit. If the interest rate goes up to another 25 basis point, same thing, let's take it as the loan amount, still same 500,000, everything the same. Interest rate instead of 3% has gone up 25 basis point or 3.25, so it gone up to 3.25. Loan tenor still 35 years. So what happened to your installment repayment? Instead of 1924.25, you pay 1994.69. So that is an increment of 70 ringgit, 70.44 from the previous one at 3%. So your installment will increase by 70.44. But let's look at your total interest you're going to pay. The impact is at the total interest towards the end, how much extra interest you have to pay. The total interest payable is 337 now, as 6768, increase by 29,593, almost 30,000, an increase of 0.25. What happened? if it goes up to 50 basis points, 0.5%. Same thing, 500,000 loan. Now interest rate has gone up to 3.5% instead of 3%. Tenor, we still maintain the same at 35 years. Look at the installment. Installment now is at 2066.45. 2066.45. And increment, if you compare this and 1924, the initial one, you'll be paying an extra of 142 ringgit 0.22. As if you compare to 3%, 1924.25, and increment of 142.22, your total interest, now stands at 367,910. 367,910, and increment of 59,725, and you compare to 308,185, an increment of 59,000. So increase at 50 basis point. Yes, your interest installment will go up to 142.22, but your overall interest payable has gone up to almost 60,000. That is very bad. What happened? What happened if it go up to 100 basis point, 1%? So from 3%, it has gone up to 4%. Okay, you have gone up to 4%, same loan tenor, 35 years. Now your monthly repayment, instead of 1924.25, you pay at 2213.87. An increment of 289.62 as compared to 1924.25. Look at the overall interest payable, okay, is at 429,827, an increment of 121,694 ringgit. Okay, six increment as compared to 308,185. Okay, this will be different. This will be the difference if that increment is 25 basis point or 50 basis point or 100 basis point. You see the difference or not? So the difference is towards the end of tenor, 29,000, 59,000, or 121,000. Okay, this is what will happen if the interest rate were to increase. Likewise, how about when interest rate goes down? Okay, how about when interest rate goes down? Yes, your installment will reduce. Your installment will reduce, and you maintain your 10 years. Means when interest rate going down, let's say 3%. To 2.75%. Okay, interest rate, the total interest, the effective rate goes down. So your installment also goes down, or you maintain your 10 years, or you maintain the installment. You pay the same, but instead of increase your 10 years when interest rate goes up, when it comes down, you reduce the 10 years to finish faster. You finish earlier. Okay, that is the impact if interest rate were to come down. I'm not going to show the chart again. Okay, just now I previewed the chart. So if you look at the previous chart, is at the other way around. If it goes down, so you pay less. Yeah, you pay less. And if you want to maintain your installment, you reduce your 10 years, you still you either can go to the bank. Okay, you can go to the bank or call them up to change the your preference, to change your preference. Okay. Now, going forward, what will happen to the OPR? Going forward, what will happen to your OPR? Okay, overnight policy. What do you think? Now increased by 0.25 or 25 basis point. Will it go up another round? Will it go round? What do you all think? will it go up to another round of 0.25%? Now already increased 0.25, will it go up? How much will it go up? This is what I think. For this year, it might go up another round. Okay, but I go up another round. I think this year they will stop at 0.5%, meaning another increment of 25 basis point to 0.25. Okay, I foresee that inflation will still increase. Will still increase. Economy go up. Economy start to move. The interest rate will also be moving up already. Okay, to cater for this. So this will relieve the pressure of the banks. Okay, they have no choice. Bank Negara no choice but to increase their OPR. When OPR is increased, you'll see the bank's own interest rate will also likewise will increase. Remember, after August the 1st, all OPR will be the same. All interest rate of the banks will be the same. It will be standard already for your housing and personal loan only. Okay, it'll be easier. It'll be easier. Next slide. How do you hedge against the rise of interest rate? Okay, do you know that you can also hedge the rise of interest rate? Very easy. I'm going to share with you this technique. Let's say you are taking a 500,000 loan, 500K. Okay, 500K loan. Your installment is, let's say, 2.5. 2.5 every month. 2,005 every month. So instead of paying 2,005, what you can do, okay, you can pay 3,000 every month. Okay, by paying extra 3,000, by paying extra 500, what will do is that the 500 goes towards your principal repayment. Okay, it doesn't calculate your interest. 500 will goes into your principal repayment. It will finish your loan. You'll finish earlier. You pay extra. Okay, your tenure year, let's say 30 years, you'll finish with, let's say, extra, you pay extra 500 every month. So instead of 30 years, you finish, let's say, 25 years. But what happened when interest rate increase? Okay, you're already used to pay 3,000 instead of 2,005. Okay, so you, in another way, you hedge against the rise of interest rate. Okay, if interest rate were to increase, you won't feel the effect. You still pay the 3,000. Now, this is how you hedge against the rise of interest rate. Yeah, this actually this strategy also, a lot of people are using this strategy. Okay, a lot of people are using. You pay extra every month. You won't feel the effect if the interest rate were to go up. Okay, if interest rate go down, you still pay the same, but you finish earlier. You finish much earlier, right? Next one. How interest rate can affect your property market. The property market. No, property market is still volatile. Okay, ups and down, volatile. But you can see that since the borders are open, things are opening up. The last quarter of last year, 2021, last quarter, property is slowly creeping up. Okay, there more people are buying. During the MCO, yes, I know probably is stagnant or goes down. Many people feel the pinch, they are not buying, but there are still people who buy. But after the last quarter of 2021, it's slowly going up. I have a chart for you. Okay, this is from NAPIC. This is from NAPIC. You know, last 2 years interest rate has gone down to 1.75. It was the lowest since way back 2014. But you look at the property transaction, it's a mix. It's a mix. Some states has increased from 2020 to 2021. Some states have decreased. Look at Selangor. Selangor was 61,507 in 2021. Okay, it increases from 2020 from 55,286. Right? You look at Malacca. Malacca has actually reduced. Okay, 2022 was higher at 14,287, 2021 lower, 12,859. What tells you about this? How it correlated with interest rate? Even interest rate has gone down. Okay, property transaction is still low. Okay, people are scared to buy property. Okay, people are scared to buy property because in view of the prolonged pandemic, because they don't know when will this end, so they hold back on their purchases. Now, when the borders open since the late last year, borders open, I can see the transactions started to move. Okay, the transaction, people start to buy properties. Okay, I can see developer start to have new project launch here, and this year, next year, they are really prepared. Okay, they see an increase in volume. They expected an increase in volume. Now, even the interest rate goes up, the OPR goes up by 0.25. People, I expect the volume of transaction will increase. Okay, 0.25 is not very big difference. Yeah, it's not very big difference, but people will start to buy because why? Because they want to hedge against inflation. Property, if you buy the right place, okay, right location. Okay, corners must be a corners your budget. Everything must be right. Okay, yeah. The product suits your preference. Okay, this is one way to hedge against the inflation. People will start buying. You have numerous packages from developers. Okay, they have come out with amazing packages. Okay. Property price, the property price, some are still the same even before the pandemic, and now the price are still the same. So I will reckon even the interest rate goes up by a bit, people still buy property. Okay, the property market is still moving. It's moving slowly, but it's expected to accelerate in a couple of months. Okay, more buyers are coming in. Okay, more buyers are coming. Okay, now I come towards the end of my talk. Okay, if you want to read more about what I've written in the articles, you can go to miichaelyeoh.com. Okay, Michael with two eyes, remember, two eyes. Or you can also follow and like me in Facebook. You look for Miichael Yeoh, again, two eye. You can also buy my latest book, Buying Property Like a Pro. You go to my website, miichaelyeoh.com. You can buy from there. We will send to you. We will send to you. Okay, we will courier it to you. Okay, I come to us. I hope you have enjoyed. You have learned something on the interest rate and how it correlated with the property market. Yeah, and I hope to see you again. Goodbye.